Money. Money.
Today I wanted to bring in the reason behind the shortage of appraisers. It's always nice to know the why behind the story, so to get an idea of what's happening, and then you can figure out a way to manage and work around this. So I'd like to share an article posted in CNBC Realty Check by Diane Olick, and this was back on the 27th, that I thought could answer a lot of consumer and agent professional questions. What's going on with appraisers? So if you're out there right now and you're in the process of purchasing a home, definitely if you're a real estate professional, you're asking this question, what the heck? I've been in the industry for 20 years and I've never seen anything so crazy. Now, we're not talking about values. That's another conversation. Of course, there's some challenges supporting values on a case-by-case basis because there's been so much appreciation in the market. But really what today's Money Chat is about the turn times on the appraisals. Again, 20 years in the industry, and I've never seen appraisals taking this long. For me, on an average, maybe around 3 weeks. Sometimes you can see them come in a couple weeks. Sometimes they can take longer than 3 weeks. It depends on a lot of factors. But here's what I would suggest as a consumer. Be prepared to pay for a rush appraisal. Now, it's not part of the standard disclosure of the appraisal. It's an additional fee for a rush, and there's a signature that's required that you authorize that. So if you're going in with a closing that I would say under 40 days, just know that you're going to be paying for a rush appraisal. Now, if you want to close in 30 days on a purchase, is it realistic for you to be able to do so? Yes. Could there be challenges that potentially come up with the appraisal? Yes. So let me give you the why behind it. Again, this is Diane's article, and the article, how she titled it, Massive Shortage of Appraisers Causing Home Sales Delays. So housing demand is rising rapidly, but a key cog in the wheel is the homeownership is in deep trouble. The people most needed to close the deal are disappearing. Appraisers. The men and women who value homes and who mortgage lenders depend on are shrinking in numbers. Now, that is causing a growing delay in closings, costing buyers and sellers money, and in some cases, even costing them the deal altogether. The percentage of on-time closings has dropped from 77% last April to 64% today for loans backed by Fannie Mae and Freddie Mac, according to Campbell Inside Mortgage Finance. Appraisal-related issues and delays jumped by 50% in that time. So the appraisal shortage is massive. You're seeing significant delays. You're seeing cost increase. You're seeing rate lock expires, said by Brian Koster, CEO of Rockfeld, Merrifield-based Koster VMC of National Appraisal Management Company. Now, since 2007, when the U.S. housing market came crashing down, the number of appraisers has shrunk by 22%, according to the Appraisal Institute and Industry Association. With so few new candidates, the current population of appraisers is aging. It's totally surprising to hear this. More than 60% are over the age of 50. Now, ironically, the decline in the new appraisals is largely due to new regulations designed by safeguard both banks and borrowers. They were put in place at the end of 2008 by Fannie Mae and Freddie Mac and FHA as an entire mortgage banking community was under strict scrutiny after the financial crisis. They changed the rules that would allow appraisers to do full appraisals and instead require the license appraisal to be on site for the inspection. So the result is that the appraisers no longer see a need to pay apprentice. But at the same time, licensing requirements to become appraiser include 2,500 hours of appraisal experience to be completed in 2 years as an apprentice. So the typical appraiser, he's going to do approximately 10 to 15 appraisals a week. For him to be able to take on a trainee, he needs the ability for the trainee to go ahead and inspect the property for him, said Koster. The rules have changed now, and you cannot do what you used to be able to do 10 years ago, which is hire 3 to 4 trainees and really have them go out and inspect the properties. Go out and do the work, and you would really function as an apprentice that market has been completely eliminated. So you can see here what the challenge is. The challenge is now the appraisers are having to do all the work themselves. It really doesn't make sense for them to hire to bring these apprentices in when they're actually not doing the work for them, but instead they're just shadowing what they're doing. And the new people are not wanting to get into the industry because all of the 25 hours that they need of the experience and all the training that's required. So this is where the challenge comes in, because our market, we've got a lot of activity taking place out there, and we just don't have the appraisers to be able to do the work. So changes in the appraisal system are being considered, but there is currently no short-term fix. When they remove the trainee to be able to inspect the property, I don't think that they understand the trickle-down effect it would have on the entire mortgage market, nor did they understand how the trainees were used by the appraisers within the mortgage market. The article went on to state in some particular cities, Colorado state, a lot of the cities there, they're seeing 7 weeks on an average for some of these appraisals. So thank goodness we're not dealing with that here. Again, on an average, we might be looking at maybe 3 weeks, could be worse. But again, my advice is prepare up front to pay for that rush appraisal. Set realistic expectations. Those of you that are agent professionals helping with the conversation of what's happening here, share this article with your clients so that they understand. Anything under 30 days, most likely it's possible that you can do this, but set yourself up for success, not for failure. And that was the Money Chat. Coming up next on the Money Hour, a shout out for my next guest and a shout out for my listeners, younger workers, and Social Security. Andy Landis, nationally known author, speaker, and my go-to guy on everything Social Security, Medicare, and Medicaid, right here on 1150 AM KKNW after this short break.